Hello everyone. In this video, I'm gonna be explaining about Wyckoff. Richard Demille Wyckoff is a guy that brought a new concept. His concept is about the price cycle. The price cycle, like the Wyckoff price cycle. So we have accumulation. We have accumulation area. We have distribution area, and we have the markup or the markdown. When the market is oversold, we'll have accumulation to push the price higher, and when the market is overbought, we'll have distribution to push the price lower. When you have an impulse to the upside, we call it markup. When you have an impulse to the downside, you call it markdown. When you have an impulse to the downside, you call it markdown. So you have accumulation, you have distribution. So it's basically Wyckoff accumulation and Wyckoff distribution. So now we will talk about the schematic, and I'll try to show you on a chart. First, when you take this, you see that it's actually complicated. It's way complicated. How would you memorize these small movements and like this support, this resistance or manipulation? Like is it's almost impossible like to know all this part. Let's see, you see this one, you have one correction, you have two corrections, okay, but when you go to a chart you can see maybe three corrections, or maybe these things doesn't have any sense, you don't even know. So I'll try to do my best so that I can explain in the simplest way. So when you have Wyckoff accumulation, first it will go curve or rounded. When you see this, we came down, okay, we came down with the momentum, and now we are going rounded, and now we are going up. So this is the first thing you'll have to know. Let me go back to the chart and I'll show you what I mean. This is Euro USD. If you look at the chart and price is coming down, okay, lower low, lower highs, and now you see that price is going rounded like this. When you see price going rounded, this first is accumulation. Like this rounded to the upside, this is accumulation. And now distribution is just rounded to the downside. When price is going to lower highs, lower lows, or higher highs, higher lows, now you'll wait for price to go like rounded, like actually when I'm saying it will go rounded, I don't mean that it will give you something like this. Actually you'll get your high highs, higher lows, or you'll get your breakout structures, everything, but you'll see when price distribute everything, you'll see that price is actually doing rounded stuff. This is the first thing you have to know. Once you know this one, now you can continue. That's the first thing. The second thing is you look for manipulations. Okay, you look for manipulations, and most of the time they happen like three times or twice. Actually, three times. So we have this. When you look at this, we created this primary supply. I'll go through all this part later, but first we created this one like a support zone. Okay, now you broke it. This is the first manipulation. We created this secondary test, or we came we create this selling climax, which means another support, yeah, actually support or resistance, whatever. So we created this zone, this level, which means whenever market will come here, and actually people are gonna be buying, so we broke this again, we manipulated this zone. You see, like we manipulate, this is the second manipulation, and now we came here, we manipulated this zone again, the phase B. We manipulated this one, which is the third manipulation. First manipulation, second manipulation, third manipulation, and now we have the spring that gets everything out of their buys or their sells. Everyone actually is out. Now you wait for a breakout structure and pull back to some sort of order block for you to take the trade. So I get back to the chart. I'll actually show you how it looks like, but first I want to explain what are the important things. Let me put this one. You, first you need, like, actually it's curved, rounded. Wyckoff is rounded. Manipulation like three times, two or three times. Actually, most of the time it's three times, not two times. Let me just put three times. Might even be four times. It depends. Now three times, and breakout structure, yeah, something like this. You have the Wyckoff overall, when you look at it, is rounded if it is accumulation or distribution. Now manipulation, when you read into the price, you'll see maybe you are manipulating some sort of liquidity, equalize, equal lows, or some lows, some highs are being manipulated. And now breakout structure, you actually need breakout structure or change of character, it depends. Actually, it is change of character I'm looking for. Yeah, actually, you need some sort of change of character, pull back to order block, and now you'll need your next rally to the action. It is the rally actually are going to trade. It's not really the Wyckoff. You don't trade the Wyckoff, but you need the change of character, pull back to order block so that I can trade the rally. It's only the rally you trade. Don't trade those manipulation. You don't really trade those part. So this is what we have for Wyckoff accumulations. Let's say price is coming, creating higher highs, higher lows. Okay. Now you see that price actually came, let's say created equal highs. We took out equal highs. Now we have some sort of breakout structure to the downside, pull back to some sort of order block. Now we drop down. If you have something like this, I can call this one some sort of Wyckoff distribution. I can take this whole range to be a Wyckoff distribution. Why I take this one as Wyckoff distribution is when you look at this, price is coming up, but this one, if you look at this, like price is actually ranging. It's not really trending well. Okay, this like actually price ranging. If you look at maybe the higher time frame or something, let me delete. Now you see this, you've broken this level, you've broken this level, and you have equal highs broken, which means this high clear all the liquidity from this area. Now you have the change of character or break of structure, change of character actually you are looking for. Now you wait for your pullback to your order block, and now you take your sell to the downside. Okay, this is actually Wyckoff distribution. I'll go through this part later, but I want to make it simple first so that you guys can understand. Now I can delete this, and I think I have a textbook example on BTC, uh Bitcoin. Okay, this Bitcoin. If you look at this, if you go to lower time frame, you can see that maybe price is how can I say it? If you go to lower time frame, you'll see that price is actually trending. Okay, you'll see that price is trending to the upside. But now if I go, let's say, to the H4, if I come here, actually you see this one is just a ranging market. You see this one is just a ranging market. Now you have the break of structure to the downside. So this whole stuff is Wyckoff distribution, and now we have the break of structure to the downside. Now maybe we will have the pullback to the order block last point of supply, like maybe this area, or there's actually some small area up here, any of these two, and now we can drop down lower. So this is actually you can see this is Wyckoff. Let me go to lower time frame. I'll show you all the manipulation I was talking about. If I come here, you can see that we had this impulse. The first level we created, it is this high. Look, this is the high we've created first. Yeah, actually this high, we created this high. Now we took this high and we created a new high. We took the high. Now we have the automatic rally with the fake out. Fake out also is now we have the automatic rally from this area. Some people are actually gonna short it from this order block. They see this one as an order block, and they see this one like uh a change of character. Okay, they will take this one as a change of character, so they will try to short from this area. What happened is price came, took them out. We have this one, price came, took them out. We created equal highs. We created equal highs here. When you look at it well, yeah, we created these equal highs. Price came, took them out, and now we pull back to some sort of order block. Now we came, the last area I can see is this spring to the upside. This thing clear all the liquidity created here. Everyone that is actually selling from this area is out at this level. Okay, everyone that is selling from this area is out at this level. And if you look at it well, uh this actually for trendline people or maybe support resistance, for them this is break and retest. They have this level, they think of this one is break and retest. Even the buy side is taken, buy sell, everyone is taken out. And now we have the rally to the downside, which we broke structure. This is actually the structure that you need to be broken because it is part of the Wyckoff. When you have the brick structure or the change of character, actually you need the whole Wyckoff. Okay, like we break all the part of the Wyckoff. You don't just break this way. You talk about change of character. This is actually very, very aggressive. You wait for the whole Wyckoff. Like if I get back here, uh okay, let me just continue. So we broke this. As we broke this, now we'll have some sort of pullback somewhere here or somewhere up here to sell down lower. This is actually Wyckoff distribution, and the same thing for Wyckoff accumulation. When price coming down, okay, price breaking lows and maybe created liquidity and break new lows, create liquidity, maybe break a low again, and now change your character, pull back to order block, buy higher. This one is Wyckoff accumulation. Why is Wyckoff accumulation? You created this low, is taken. You created equal lows taken, created some sort of equal lows taken, and now you have uh this low that took all the liquidity from this area, and now you have the change of character we are looking for. You have this change of character. Okay, now we pull back to some sort of order block. This order block, there's actually some sort of demand zone, last point of demand, so that price can pull back to before buying higher. You just trade when we had the change of character already, and now we wait for the pullback so that you can take the buy. All this part, you just wait for the scheme or the schematic to like print all this. Because from this, if you want to take buys, you're gonna be stop out. If you want to take sales, actually some sales might work out. Okay, when price coming down, you can take some sales if you see. But this actually, a lot of manipulations there. If you try to trade, you might have a lot of stop losses. So this accumulation, I'll try to get some sort of example on Wyckoff accumulation. If I come here, this might be Wyckoff accumulation. From this area, let me just take this little part. Okay, I take this one. This one might be my Wyckoff accumulation. Now let me replay market. I will show you why. Okay, now here I can read into the price. If I come here, what happened is you have this. You have what? We came. We created this low. You see this low created. We took this low. You created a new low. Okay, it's taken out, and this one actually is only two manipulations. We manipulated these two lows with this rally to the downside. This one clear all the liquidity created here, and even some past liquidity here. Everything is taken out. Okay, I can even take this whole range to be wiped out. I take all this. The reason I'm taking all this is this low manipulated all this level. Look at this. You have this. You have this. You have this liquidity taken. You have this one. You have this one. You have this one. Like I think this is three times. First, second, and the third times. Now you have the spring to the upside, that broke structure, and maybe you'll have some sort of pullback down here to be able to buy to the upside. This Wyckoff accumulation, and the same thing I showed you on the Wyckoff distribution. From this, I can see Wyckoff accumulation, Wyckoff distribution without even knowing any of this part, like premium supplies, selling climax, automatic rallies, secondary test, all this stuff. And the same thing on Wyckoff accumulation. It's just the same thing here, okay? But like inverted. Just turn it down. The same thing happened that we turn it to the opposite direction. Yeah, this one. Just the same thing that we turn it into the opposite direction. And it did happen actually. So now I'll try to show you all this. Let me give you some more examples. Okay, this is Wyckoff accumulation. The reason this is Wyckoff accumulation is if you look at this, price has a rally down, and now we created this first level. Okay, look at this, created this level, and we created this level, and we created this level, and now this last move down took all the liquidity. Now we had a breakout structure to the upside. If you look at this actually breakout structure or change of character. Okay, this is actually the change of character we got. Now last point of supply, we have this one. This is actually the only clear order block you can look at. You have this order block. Maybe if you want, you can have this, but this one, yeah, you can actually have this. You have two areas to look at, but price just came mitigated this and buy. If you took this buy here, you don't read everything that has happened here, but you wait for your higher time frame breakout structure or just the breakout structure of your Wyckoff, and you wait for the pullback so that you can buy. Your buy is going to be here. You don't read all this part. And now from this, if I want to have all the schematic, this accumulation, right? Let me come to the accumulation preliminary support. This one. Let me just, I'll mark everything here and you guys will see. Actually, what is important for me is primary support, selling climax, automatic rally, secondary test. Sometimes the secondary test in phase B doesn't happen, and we have the spring breakout structure. Now you wait for the pullback so that you can take the trade. Now, primary support, PS. Let me come here. You have this one. You have the PS. Okay, this is the PS. If I come back here, after the PS, we have this selling climax. Selling climax is this. We have the selling climax. Now we'll have automatic rally, which is this one, automatic rally. We have the automatic rally, and after the automatic rally, we have the secondary test in phase B before the spring. Actually, here the secondary test in phase B happen. This, yeah, the secondary test in phase B is here, and after the secondary test in phase B, we have the spring. The spring, it is the spring that will clear all the liquidity created here. Even the secondary test, actually, we are gonna take all the liquidity, and now have the change of character to the upside. When I look at this, you have this the spring. Yeah, you have the spring. From this, you have the spring. You have the breaker structure, pull back to order block, and now you buy to the upside. If you look at this, you can also have this test, LPS, everything, but I don't really focus on this. If I get back here, you can see this small part here. You have this up, you came back down from this area, you can actually have your test. Okay, this is your test. Sometimes some people actually enter from the test and the LPS. LPS actually they enter from the LPS or the test they enter. Actually, I wait for the change of character from my Wyckoff and pull back to my last point of when we actually see last point of supply or last point of demand is you have this Wyckoff. Now you look at from your spring to the change of character, you look for some sort of order block. Most of the time you don't have like a lot of order blocks. Maybe it does happen, you can have a lot of order blocks. Let's say the case where you only have one, like this one. If you only had this and you didn't have any other, this one would be your last point of demand, because this is the only reason for the market to come here to buy. Because if you had plenty, you know, say that okay, these three or these two are actually my last point of demand. If it is two, you just maybe look for some sort of confirmation at each, or if not, maybe you can have yeah, you can look for confirmation at each, or maybe enter 0.25 or maybe half position in both cases. Okay, but if you have only one, let's say you only had this is going to be your last point of demand. And it's the same thing if you had work of distribution, you'll also look for your last point of supply. So we had this work of accumulation, everything is successful. You see all this part, primary supply, selling climax, automatic rally, secondary test, phase B. Uh, I think we had secondary test before secondary test in phase B. Yeah, this secondary test in phase B, I actually did that was a bit of a mistake. Yeah, we had this. You have this secondary test and secondary test in phase B. Yeah, secondary test phase B. Sometimes the secondary test and the secondary test in phase B might be equal lows. It does happen. Like sometimes you look at this, you have this secondary test and you have secondary test in phase B. You see this one is a bit higher and this one is lower. But sometimes these two are going to be maybe equal lows. It does happen to be equal lows sometimes. So when you look at this, it's not really equal lows. Even on this, it's not really equal lows. If I bring this one down, you see this one, this our secondary test, and this is the secondary test in phase B. This is different, but sometimes you can see equal lows. It does happen to be equal lows. So this is actually all a part of the work of accumulation, and the same thing with work of distribution. So if you look at this, what happened is you went rounded. This is the first thing. You went like this, rounded. Makes sense. Now the second thing, you can look for the part. You can mark your part. You have this. You have this. You have this. How many manipulations? You have one, two, three, and you have this. And the last that took liquidity is going to be our UTAD. Or let me start from the beginning. We have this manipulation, second manipulation, third manipulation, and actually fourth manipulation. So I think with the fourth manipulation is going to be this small level of created here. Okay. Now I get back. We have the we have the PSY, which is the primary supply. PSY, and we have after we have the buying climax. Buying climax. After the buying climax, we have automatic rally secondary test. Automatic rally secondary test. Automatic rally, we have secondary test. Yeah, we have secondary test. After the secondary test, we have this sign of weakness. Okay, sign of weakness. We have this sign of weakness. Okay, we have sign of weakness. After the sign of weakness, we have the UT and we have the UTAD. The UT, it is this. You have the UT, you have the UT, and you have the UTAD. Okay, you have UT and you have UTAD. Okay. From the UTAD, now you wait for your break constructor to the downside. You can take this one. You can take this level as your break constructor. You have or change your character. Okay, you got your change your character. Now you wait for the pullback to your last point of supply. When you are going down, now you are looking for your last point of supply. When you are going up, you are looking for your last point of demand. So when I get back here, you can see last point of supply. This one, the LP, the LPSY, LPSY, which is this one, LPSY. You wait for the break structure to the downside, and you wait for the pullback to the LPSY, which is the last point of supply. Let me check. For the last point of supply, you'll have to look for. You'll have to scroll between time frames so that you can get the one that price came to mitigate or your last point of supply. This week on lower time frame might be another block, but I don't really know which one because TradingView will not allow me to go that far. So this Wyckoff distribution, you can see that we went around it. Okay, we went around it. We had the change of character. We had manipulations, highs, created highs, and now pull back down. And there's something I want to tell you, like you don't have to memorize all this part, premium support, buying climber, secondary test, all this one. You put this one actually is fancy, yeah, but you don't need them to know this one is Wyckoff or not. Me, for them, I know if it is Wyckoff or not without even putting this one. If I remove this, I can actually leave it like this and put this one as Wyckoff distribution. I can put this one as Wyckoff distribution because I know that we have manipulated highs. We manipulated all the highs, and now you clear all the liquidity, drop down, had the change of character, now pull back to some sort of order block to drop down. So this one, for me, this one is already Wyckoff accumulation. If I come back here, I like look for Wyckoff distribution. I can also get it. Uh, it doesn't always happen Wyckoff accumulation or Wyckoff distribution. This one, we can talk. This one we distributed, but if you look at it well, maybe you can have some sort of Wyckoff distribution. You can have it. You see, we created highs, breaking highs, created new highs. Now this week actually took all the liquidity from this area. Now we had the break structure to the downside. We look at it well. We had this low, which is break structure, pull back to some sort of last point of supply before dropping down. This is Wyckoff distribution. Actually, I just saw this one rounded and manipulation, break structure, pullback, and that's done. We don't really have to mark all the part. And if I continue, I think I still gonna get something. If you look at this Wyckoff distribution again, you have this one Wyckoff distribution. You created equal highs, taken out. Actually, this one the manipulation happened only once, I think, or twice. Equal highs took out, dropped down. Now we created highs, we took them, but actually we didn't take this high. It had a change of character. It's still this one is a distribution, but if you actually don't have all the part, it might just be a distribution, not Wyckoff distribution. We have this distribution and Wyckoff distribution, accumulation, Wyckoff accumulation is actually a bit different. Uh, if I come here, this one might be Wyckoff accumulation. We have this week which clear all this liquidity, break structure to the upside, pull back to some sort of order block before buying up higher. So this Wyckoff, I hope you guys understood what is Wyckoff right now. If you go to the chart, just try to go to the chart and look to spot them. Like you spot this is Wyckoff, you get all the manipulation, break of structure, and if it is rounded, if you want, you can also put those names. Okay.